continue between the United States and China, threatening to escalate. US President Donald Trump is now hinting he'll restrict Chinese investments through a national security system over fears of intellectual property theft. So how will this impact on investors, particularly if it eventuates into a full-blown trade war? Even investors in Australia. For his view, I'm joined by Geoff Wood, the head of macro and risk at funds manager Morphic Asset Management. Geoff Wood, thanks for joining us.
Hi, Anna.
Now, this is really, it very much is dominating markets, isn't it, particularly in our region?
Yeah, it's huge. It's just, I mean, it's global, really. I mean, the Asian particularly are feeling the brunt with the Chinese and Hong Kong share markets, really down almost 20% in this last month or so, and a lot of it is attributed to this trade tariff escalation.
Yeah, so how are you seeing it? I mean, the China did offer, and now this is a month ago, but they did offer to sort of buy more American goods and, you know, try and help with, what, $70 billion in terms of reducing the trade deficit. That wasn't enough, though.
No, but that very much looked like it would do it. I mean, in the prior points to that offer from China, it was all about trade, it was all about the trade deficit. The US has got a trade deficit with China of around about $400 billion US dollars. Trump had announced that he wanted to get that down by 100, which initially sounded quite ambitious. So last month when China came in and said, okay, we can meet you at 70, and that would have involved them redirecting where they buy various imports from to the US from places like Australia, etc. The market was thinking, okay, finally we're into the details of the negotiation, and stock markets were rallying. So it was somewhat a surprise when Trump turned around and said, no, that's not good enough. And now the emphasis is really focused, like you say, around theft, around IP.
Yeah, so do you think, in fact, that's really the main game? I mean, we've known a lot of American companies, particularly advanced manufacturing companies, a lot of their fantastically innovative tech companies have been worried about theft of IP, and yet we also know that Apple makes their iPhones by a company in China. You know, they must be reassured, mustn't they, that there's no sort of little equipment being implanted, or that their IP isn't being stolen?
Yeah, that's right. I mean, it's a big thing for a lot of people. Trump, to some extent, is the first person really at a global level to stand up and try and take a stand against this. And
yeah, and shouldn't he be given marks for that?
Oh, I do believe he is. I mean, what you're seeing globally is a lot of politicians are starting to say it's a fair point, but we don't necessarily agree with the way you're going about it.
Right.
But this is classic Trump style of going pretty heavy early, use the tariffs as a leverage tool, and then try and get to the underlying issue. So the IP thing alone is itself worth a couple of $100 billion, they estimate, in terms of loss. So at the weekend we got a report out co-authored by Peter Navarro. He's sort of a figurehead in the trade department, which is at the heart of this tariff.
Well, he's really actually his senior trade confidant, Trump's senior trade confidant, and he's a deep China skeptic, isn't he?
Absolutely, and he's very passionate about it. I mean, in 2011, he wrote a book specifically titled Death by China, a call to global rally against the Chinese. So this is something he passionately believes in. He's been spending well over a decade researching this. And to some extent, this is a dream come true for him. He's now in a position of power to actually put forward some of the changes that he's been arguing for. So he cites things such as espionage, cyber theft. There have been examples where one of the major telcos, Verizon, over there did an independent research, and something like 90% plus of the attacks done on their system in terms of data theft, etc., were coming out of mainland China. So these are the sort of things that Navarro is pointing to in terms of hard data to say, you know, we got to tackle this.
Yeah, but then on the other hand, I mean, he is seen as very sort of ideological in his zeal, in that sense, being anti-China. But on the other hand, you've got Steve Mnuchin, who's the Treasury Secretary. I mean, they don't appear to be on the same page on this. He wanted to go more softly.
Yeah, I think this is one of the things that Trump likes to do. He surrounds himself with a good cop, bad cop, and Navarro in this instance is the bad cop. He'll use him again as a leverage tool and probably play it a little bit more down the line. But nevertheless, this is still it's unlikely to be resolved in the short term, is our view.
All right, so this Friday, aren't we getting sort of the latest on what they're going to do about Chinese investment into American tech companies?
Yeah, so this week is a report around exactly that. You know, what is the way that the US are going to manage investment into the US from China in terms of trying to control IP theft. So this will be the first sort of official hint in terms of policy around that area. So the market's quite transfixed on that. And if it looks too sort of combative, then that would be seen as another source of escalation from China. Because a lot of these points, we have to say, the Chinese dispute.
Of course, they say we don't steal IP.
Exactly. Now, I think the trade deficit is a hard number. It can't be argued against, and you can say, okay, let's have a sensible conversation around it. This is a lot more tricky, where it's sort of he says this and he said that, or she said that, and then how do you find a resolution in the middle of that? So it's actually pretty complicated.
Yeah, so how do you think as an investor, and you invest other people's money, how is that going to affect you investing, your strategy, but also how will it affect markets, do you think?
So we've taken quite a cautious angle on this. I mean, the things like US stock markets aren't actually that far from their all-time highs. We believe that the US stock market, the S&P, is largely range bound over the next few months, and given we're still in the top third of that range, we think the risk is further to the downside as this continues to escalate. I think the market's probably a bit too optimistic on this getting resolved in a quick time. So we've raised cash in the fund, and we've put some portfolio hedges around this escalating further.
All right, what percentage cash are you in?
We've got around about 15 in pure cash, and then probably another 15 worth of hedges.
Yeah, all right. You've been at that level before, so not that much of a change?
No, well, generally for 100% fully invested is our base level. We'd go to say 50 if we were uber bearish. So we're sort of sat between the middle of those two ranges at the moment.
All right, Geoff Wood from Morphic Asset Management. Thank you. Great to talk to you, Geoff.
Thanks, Helen.
And a program.